Okay, hi all, welcome back. Today I'm going to go through the first part of a depreciation of fixed assets question. Now, the depreciation of fixed assets question is a question that only comes up at a 60 marker. It's not. It doesn't come up as a longer question. It is similar to the revaluation of fixed assets question in that it's dealing with fixed assets. This time, though, vehicles as opposed to land and buildings, and also it asks you to prepare some ledger accounts. So not trading profit and loss and balance sheet as in other questions, but ledger accounts. So if we look first at, I should say, we'll be dealing with the 2002 question as an example. If we look for what you're required to prepare, first of all, you're required to prepare with workings the ledger accounts for each of the 2 years, 2000 and 2001, the vehicles account, the provision for depreciation account, and the vehicles disposal account. So if you have already done the revaluation question, you'll be familiar with disposal accounts generally and depreciation accounts generally. And like the vehicles account is the asset account, if you like. So it's similar to the land and buildings account in the revaluation question. Okay, so here's the premise of the question, first of all. The idea is that you have this business and they have a certain amount of vehicles at the beginning of the year 2000, we'll say in this question. And then over the course of the next 2 years, what tends to happen in all of these questions is during the year 2000, they get rid of one of the vehicles that they originally had and they get a new vehicle. And then during the year 2001, they get rid of a different one of the original vehicles and they purchase a new vehicle. So that's pretty much all that happens, and you're asked to prepare the accounts based on that information. So again, drawing parallels with the revaluation question, where the revaluation question had like about 5 different years worth of accounts that you had to prepare, and they gave you information on things that happened each year for those 5 different years. There's only 2 years that we're concerned about in the depreciation question, and the information here is in this little paragraph here. They tell you the first few lines is usually about the year 2000, we'll say in this case, and the last few lines are about the year 2001. Okay, so let's get started. The vehicles account, first of all. So, and again, it's just a, whoops, it's a T account. Okay, this is an asset, so our rule about assets and expenses on the debit side, gains and liabilities on the credit side, mean that this debit side is the plus side for a vehicles account. The credit side is the minus side. So if you're getting more vehicles, basically, you'll enter it onto this side. And if you're getting rid of vehicles or disposing of vehicles, you'll enter that onto this side. Okay, so to start with, they want us to do accounts for the years 2000 and 2001. So we'll begin on this side, on the first of the first 00 for 2000. We'll start with a balance brought down. And our information that we'll put in here, the monetary amount, is going to be the total value of all of our vehicles on that date. Okay, and it's not, well, I shouldn't say value either, because it's not the net book value we put in here, it's the cost, really. We don't include anything to do with depreciation in the vehicles account, just like we didn't include anything to do with depreciation in the land and buildings account in the revaluation question. Okay, so if we look at what it says at the start of the question, first of all, Trench Transport Limited is the business, prepares its final accounts on the 31st of December each year. The company's policy is to depreciate its vehicles at a rate of 15% of cost per annum, calculated from the date of purchase to the date of disposal, and to accumulate this depreciation in a provision for depreciation account. So all that depreciation information is irrelevant for now when we're doing the first part, the vehicles account. It will be relevant shortly. Okay, so we can forget about that for now. The next thing it tells us is that on the 1st of the 1st 2000, Trench Transport Limited owned these vehicles. this one that cost 66,000 in 1996, this one that cost 72 in 1997, and this one that cost 78 in 1998. So if we want the total cost of all our vehicles at the beginning of the year 2000, we need to add up those three for a start. There's a little bit more to it, and we'll get to that in a second. So we'll add those up. 66,000 plus 72,000 plus 78,000. So our three vehicles cost us 216,000. However, it's peculiar to this question, and so far every year that this question has come up, they've always had a little bit extra information in here about one of the vehicles. It could be any of the three vehicles here, vehicle 1, 2 or 3. In this case, if we look at this line here where it says, on the 1st of the 8th, 2001, vehicle number 1 was traded in for 12,000 against a new vehicle costing 90,000. That's fine. We don't really need to know that yet until we get to the 2001 account, but this is what we do need to know immediately. Vehicle number 1 had a refrigeration unit fitted back in 1998, and it had cost 16,000 at that time. Now, if they added this refrigeration unit onto vehicle number 1 here, the one that cost 66,000, well, really the ultimate cost or the total cost for that vehicle number 1 is this 66,000 and the 16,000 for the refrigeration unit, because in a way it's almost like a different vehicle when they added this refrigeration unit, a more expensive vehicle. So what we're doing when we're getting the total cost of all our vehicles at the beginning is we're adding up the three of these, but we're also adding in the cost of that refrigeration unit, which is now part of vehicle number 1 as well, because they fitted it in 1998, so prior to the start of the year 2000. So we're going to add that 16,000 onto the total we have so far. Plus, and we get a total of 232,000. And that's our balance brought down at the start of 2000. Okay. So again, after that, it becomes relatively straightforward. If we dispose of a vehicle, get rid of it, we put it on the minus side to lower the total in our vehicles account. If we get a new vehicle, we add it onto the plus side to increase the amount in our vehicles account. So let's look at what happened in the year 2000 according to the question. So it says, on the 1st of the 4th, 2000, vehicle number 3 was crashed and traded in. So vehicle number 3 was gotten rid of on the 1st of the 4th, 2000. That's the first thing. So if it was gotten rid of, we're going to the minus side. We're putting in the date, 1st of the 4th, 00. When we either sell or crash or whatever we do with a vehicle, when we get rid of it, we always use the term disposal. It's disposed of. And it said vehicle number 3. So that's the one that had cost us 78,000. So we're taking that 78,000 back out of our vehicles account by putting it on this side. Okay, what else happened? So vehicle number 3 was crashed and traded in against a new vehicle costing 96,000. It means you got a new vehicle which had a cost of 96,000. Okay, so that means your vehicles went down by the vehicle you got rid of, but then went back up by 96,000 because you bought a new vehicle, and that was on the same date, 1st to the 4th. It all happened in the one day. And we say for this one, bank and trade in, because you paid for the vehicle partly in cash, but partly by trading in that vehicle that you'd crashed. So you didn't have to pay the full 96,000 of the cost in cash, but that was the total cost of it. So that's the amount that goes into the vehicle's account. So that's it really for the year 2000. Nothing else happened. All we need to do is balance our accounts. So again, when we're balancing a ledger account like this, we always add up the bigger side. We can see that this is definitely the bigger side than this, so we total that. So totaling that, we have 232 plus 96, giving us 328,000. Okay, then we have to have the same total on both sides of our account, so this has to be 328,000 also. And then we ask ourselves, what do I need to put in here so that this and this will add up to 328,000? And that's what we call our balance carried down. And that's always at the end of the year, 31st of the 12th, 0, 0 in this case. So 328 minus 78,000, 250,000. So that's our balance at the end of the year, which becomes obviously our balance then at the start of the next year, because the end of one year is essentially the same as the start of the new year. So balance brought down on the 1st of the 1st, 01, 250,000. And just to show why that's right, I mean, without using the account system, you can see you had vehicles which had cost 232 at the start. You got rid of, if I minus 78,000, you got rid of one, and then you got another one plus 96,000. So now the cost should be 250. Your balance should be 250, and it is 250. Okay, so moving on to the next year then, 2001. Again, in this paragraph here, we just start in our 2001 here. It says on the 1st of the 8th, 2001, vehicle number 1 was traded in for 12,000. So this time, vehicle number 1 was gotten rid of. So it's again, when we get rid of a vehicle, disposal, 1st of the 8th, 01 this time, it's disposal. And this time, it's whatever the cost of vehicle number 1 was. Now, the only thing is, vehicle number 1 cost us 66,000, but we had added a refrigeration unit for 16,000. So the total cost of vehicle number 1, or the total amount of fixed assets that you're getting rid of, is both the 66,000 and the 16,000, because that's going to, since it was attached to vehicle number 1. So we have to add the two of them together, 66,000 plus 16,000, giving us 82,000. So our disposal figure is 82,000. So next thing is, what else happened? It was traded in for 12,000 against a new vehicle which cost 90,000. So again, we got a new vehicle, 90,000. When you get new vehicles, we put it on the plus side here. It was paid for partially with money and also a trade-in, so a bank and trade-in. And it was 90,000 we said, wasn't it? Now it happened on the same date, 1st of the 8th, 01. And then we add up the bigger side again. That's going to give me 340. Both totals must be the same. 340. So what do I need to put in here for my balance carried down? On the 31st of the 12th, the end of 01, last day of 01, it's got to be whatever I need to add to 82 to make a total of 340. So 340, oops, 340, well that's only 34, 340 minus 258 is going to be our total. Our balance, I should say, not my total. That's my balance carried down, and that will become my balance brought down at the start of the following year. So balance brought down 258,000. And that's it, and we'll move on to the next part of the question in the next video.